Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Obviously, the big news is that the US and Iran have come to a deal on the conflict. Now, while both sides are trying to claim a sort of victory in the upper hand, it is quite interesting when you look at it. It doesn't seem too much difference from the deal that Obama negotiated, that Trump pulled the US out of during his first term. Now, although the deal hasn't been officially signed yet, that should be signed officially on Friday. Potentially it's looking at sort of a 60-day negotiation period to come up with a finite deal. Now, obviously, quite a few sticking points. Most noticeably is what's going to happen to Iran's uranium. But what it does look like doing is opening up the Straits of Hormuz, which, again, is going to be a major bonus for the shipping and the exportation of oil. Now, the other big question mark over this is how Israel accepts this deal, because as yet they've been very quiet. They're still looking at potential conflict in Lebanon and taking out Hezbollah. And certainly Netanyahu has been very quiet and really hasn't made very much comment about the deal at all. But obviously good news, and oil is falling on the back of it. Certainly Trump is spinning it as a major deal going forward, because certainly he needs some good news, because popularity is still falling, and he suffered a further defeat with the judge ruling that he had to remove his name from the Kennedy Center. Now, on the back of this deal, interest rates in the US have fallen. The 2-year is back at 4.02, the 10-year is 4.42, and that 30-year is 4.92. So quite substantial falls in US interest rates. But it will be interesting because the Fed meet this week, and this is going to be the first meeting with the new Fed chair, Kevin Warsh. But given the recent inflation data, that came in at 4.2, Trump has already come out and sort of trying to lay the groundwork, because saying that he sees no reason why the US should be increasing interest rates. But again, if you look at Fed funds target rate currently is 3.5 to 3.75. And given where those interest rates are and the sort of market going forward, potentially we're looking at a rate hike in the US before year end. And that's certainly not in Trump's playbook. Now, Warsh has come out and said potentially he might look at communicating the dot plot that the Fed have. Now, that's been a pretty integral part in sort of transparency from the Fed and sort of indicating where the voting members see interest rates going. Potentially one of the reasons why you may be looking at removing that is because, and given the current environment with inflation, etc., you may be looking at those interest rates moving up. Now, obviously, the other big news was the SpaceX IPO, and that certainly lived up to all the hype and then some. It's now the 5th largest company in the world. And if you look at it, that does have some pretty major implications out there for index funds. Because usually with sort of IPOs, there's a waiting period of sort of, 1 to sort of 6 months before they go into the index. But potentially, SpaceX could be entering these indexes now within sort of the next sort of week or so. So now that we've got this Iran deal, it's just going to be interesting to see how the market sort of settles down over the summer period. Because certainly you've still got inflationary pressures in the US. You've got a reasonably robust economy on the employment front. And given that data set, there is no reason to cut interest rates further. Because Trump certainly needs some good news out there, because his polling numbers continue to fall. So on the back of the Iran deal, oil has fallen substantially, currently 76.80 and change. And now it's just going to be very interesting because, you've got the sort of good news out there and the initial sort of, sell-off on the back of the deal. It's going to be interesting to see how quickly oil starts to flow through. Now, obviously, the falling oil prices are very good news for the UK economy and the Bank of England. because it certainly does take some pressure off the inflationary pressures out there. And potentially, the bank might just be able to cut interest rates in the next sort of 2 to 3 months. Now, in the EU, going the other way, the ECB actually hiked rates up to 2.25. But that was before the Iran deal was announced. So potentially, does that mean the ECB can now be on hold for the rest of the year? Now in Australia, the Reserve Bank left rates unchanged at 4.35, but they've already seen 3 hikes already. So again, with the falling oil prices, does this mean the Reserve Bank of Australia is on hold now for the rest of the year? Because certainly that weaker inflation data, and you would expect inflation to fall further on the back of the falling oil prices, and the slightly weaker economy, that GDP number was a little bit on the weak side. The Reserve Bank doesn't really have to increase interest rates further. Indeed, some analysts are now questioning potentially the next move in Australian rates might be a cut. Now here in New Zealand, a very good turnout for the field days, and that's obviously good news for the agricultural and horticultural sector, which has certainly been doing pretty well over the last sort of 12 to 18 months. Now, the latest housing data in New Zealand was a little bit on the softer side, taking a tad longer for houses to sell, and prices certainly aren't increasing very much. But then again, if you look at the sort of consensus and the sort of projects going forward towards sort of year end, it's reasonably encouraging news, which should be good news for the New Zealand economy. And on the back of the falling oil prices, starting to see that sort of showing up in the pump prices as well, because gasoline is sort of falling. And certainly that will be good news for the Reserve Bank. Given the sort of fragile economy, potentially does that mean New Zealand can get away without having to hike rates in the next sort of 2 to 3 months? Now, coming up to the end of the KiwiSaver year, 30th of June, make sure you've made enough contributions to get the maximum government contribution into your KiwiSaver account. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.